Good afternoon, everyone. Gabe Velazquez here with you, TransparentTradeSolutions.com on a Friday. This is the 4th of October. Yeah, the jobs number, you would think it was higher than expected. Let's get into the charts. I am having a class coming up. Make sure and sign up for it. It has to do with all the uncertainty that is coming up with the elections, the geopolitical stuff going on with Israel and Iraq and Iran, so on and so forth. How you can look at the implied volatility and options, take advantage of some of that. That's going to be a week from today at 11. I am limiting it to 30, so go ahead and hit the link below and sign up for that. You will be, if you're part of my newsletter or email, you'll get a notification on that shortly as well. Okay, all right, let's get into the charts and just going to go over the notables here. So today we had obviously a higher than expected jobs number, and the most notables are the interest rate market, which jumped huge today. So we got rates jumping right back up, possibly going above 4, which is probably going to be a little bit of a challenge for stocks. Maybe some say, well, it's going up for the right reasons because the economy is still strong, but we'll see. It's really puzzling to me that everybody keeps telling you that rates are coming down because the Fed, in fact, the rates are the 10-year yields are 40 basis points higher today than they were the day the Fed started lowering rates, and they went by 50 basis points. So remember, it's all short-term related. The Fed only controls Fed funds rate, the discount rate. That's all ultra short-term. Long-term rates are determined by the market, and the market is saying that inflation may be creeping back up again, and so on and so forth. So it's really interesting dynamic. In regards to the stock market, there's really not much, even with today's rally, still cannot get out of these ranges. Bottom line, you can see we could possibly make another new high, but today's action was really choppy, similar to what we've experienced in the next week. Even the NASDAQ couldn't get out of its way today. They attempted a rally this morning, and as soon as we got up to these levels here, we've dropped down, and we're closing near the highs of the day, but maybe we'll get finally a breakout. And again, this also speaks to the underlying stocks that are basically doing nothing. Nvidia can't even get above 125. Apple kind of just hovering. Big swings in Tesla, and so on and so forth. So mega caps are still struggling to get any kind of traction, and I think this speaks to that. Whether that changes next week, obviously we'll have to see. Similarly, the Russell, just a big old mess. Nothing changed today, really. The only thing that really changed was rates going higher. Ultimately, at the end of the day, that's really the only thing that changed today. And the dollar, by the way. So the dollar had again, related to interest rates, had a huge rally. This pushed all the currencies down. If by the way, if the dollar breaks above 103.10, then it's probably headed right back up to 106, and we'll be back to the same old. The metals, silver in particular, was all over the map today. Huge volatility in this thing. This morning we were as high as 33.22. We had this big spike this morning, and then it just gave it all back. So lots of algorithmic trading there. Gold fairly quiet. Oil also kind of consolidating. I think we're just waiting for what the next shoe to drop in the Middle East, whether Israel will actually attack some of the oil facilities there, or they're going to basically go after some nuclear sites and so forth. We don't know that. I think that's the next issue that oil has to deal with. If they only go after the nuclear sites, then I think we probably have a pretty sizable drop. This is all just predicated on all the tensions building there. If they ease up, we should have a pretty sustained drop in oil. Nat gas similarly just cannot get any kind of traction. Just hit the $3 level, as I've been talking about, the key level, and sold off pretty hard. We'll see if we continue in a range between 250 and 3. And then lastly, the grain markets in similar kind of muddled up, just no follow through whatsoever, hitting some of these levels up top here and then pulling back on the grain markets. So overall, just been a very choppy week across the indexes. Maybe I thought maybe today's number would change that, but maybe we just have to go back to earnings. Earnings are started up on for a week from today with banks, and we do have CPI on Thursday next week. That's going to be an interesting situation, but overall, not sure what's going to get this thing moving. Volatility still at 19, by the way, the VIX, which is another kind of interesting situation here. I think volatility, VIX has to go probably back to 15, which would take us to a new high in the S&P, and then we'll be getting closer to the elections, which, as you know, always creates some volatility. So that's where we're at. Again, sign up for the class a week from today. It'll be at 11 Pacific, 2 Eastern, having to do with implied volatility and then the uncertainty. You can wrap some strategies, option strategies around that. Okay. All right. Have a great weekend. We'll see you on Tuesday. Take care.